Welcome, participants. The session will be starting on the dot of 9. Good morning, everyone, and welcome to today's webinar hosted by Deloitte. Our topic today is workforce management, with a special focus on mobility, taxation, and regulatory considerations. My name is Sarah Nayeju, and I'll be your anchor for today's session. The session is expected to run for 3 hours with 2 paper presentations and 2 panel discussions. The first paper and panel discussion will be on tax compliance, consideration in a mobile world, whilst the second paper and panel discussion will be on navigating COVID-19 mobility issues, changes in the architectural landscape of migration practice and regulations in Nigeria. We'll go through a few housekeeping rules. The session is being recorded, and all registered participants will receive a copy of the presentation in their registered email addresses. Please use the comment box to drop the chat box to drop your comments. And should you have any contributions during the paper presentations or the panel discussions. There's also the Q&A icon on Zoom that you can use to capture your questions. These 2 platforms are regularly monitored. At this point, I will welcome Yomi Olugbenro, the Deloitte West Africa tax leader, for the welcome address. Yomi Olugbenro, please.
Thank you so very much, Sarah. Good morning, everyone. Good to be having you on our program on this webinar this morning. I want to very specially welcome everyone, all our clients, regulators, and particularly our speakers and panelists. I want to especially say thank you for being part of our session this morning. So I think we are aware that COVID-19 has brought so many things to the world, particularly digital transformation and a whole lot of other fallout of the pandemic. One of the things that it has also significantly impacted, which is the focus of our conversation today, is mobility arrangement across the world. One of the areas that was so badly affected, it's tourism and movement of people. And so with this kind of change to how people move and how people work, regulatory implications also goes along with it. And we've seen many organizations these days that are beginning to adopt hybrid work arrangements, so which allows their employees to work remotely, and also work on site. Now, when you have remote work policies where work becomes borderless, you will have people sitting in a different part of the country, in a different state, and delivering work for employers that are located in a different part of the state. And just by the same token, you could have somebody seated in a totally different country, and working for an employee located in another country, or in fact, probably even another jurisdiction. Now, this itself, it's a new vista when it comes to what's the taxation, the regulatory, the immigration consideration for all of this are. So what we're intending to do today is to look at this new phenomenon within the workspace. So as people begin to work in a borderless manner because of the possibility of hybrid work, because of the possibility of remote work, what are the tax implications? What are the regulatory implications? So I know on the call today we'll have, mobility experts, we have HR practitioners, we have tax managers, and people who are charged with ensuring that from a people perspective, the organization stay compliant and the organization is abreast of what the implications of having people seated in a different countries and delivering work for employer located in another jurisdiction. So what are we supposed to be aware of? What are the tax implications of all of this? Or what concerns are there for regulatory authorities to also begin to appreciate and begin to adapt and and tune their regulations to? So that's the focus of our conversation today. So that's why the theme says, global mobility or workforce management, as it were. So what is the mobility implication? What is the taxation implication? And what is the regulatory implication? So that's what we're going to be engaging you on this morning. And I want to very specially thank the lineup of speakers, who have agreed to be part of the session today. So all our speakers, all our panel member, we've carefully chosen them with knowing fully well that they've got the right material to be able to guide us through this session today. So I want to especially thank them for agreeing, and I want to welcome all of you to sit back and be part of this conversation. Let's make it very interactive. Use the chat box, like Sarah had said, and the question box, to post in your questions. In addition to those that will be frontlining, speaking to you, we also have people at the back end. So you can be very sure that no questions will be left unattended. So questions that can't be treated live on the session are going to be attended to by the technical team behind the scene. And the team will let you know how the responses are going to be passed across to you. So welcome once again to this special webinar by Deloitte. We're glad to be part of your morning today. So I will hand back to Sarah to take us through the proceedings as I also just relax a bit and enjoy the session. It's good to be on this side today. So just to enjoy the technical insight from all our great speakers, both in-house and our clients and our regulators. Thank you. Enjoy the rest of the day. Sarah, over to you.
Thank you very much, Yomi, for setting the tone for these conversations today. Participants, you've heard it, our course of deliberation today. So we'll kickstart the session by getting feedback from our participants, and you are the important part of this session. So on the screen at the moment is a poll with a question: what is of great concern to your organization with regard to management of workforce? Now you can participate in this tool by either logging on to www.menti.com using the access code 93299729. Alternatively, you can scan the QR code displayed to participate in the poll. Okay, let's have the results displayed so that we can see how people are voting on these questions. Wow, we are seeing where we got 4 votes in, and looks like everybody is focused on well-being. We have a vote for taxation there. Please let's have your votes. More people need to participate for this to show more of what our perspectives are. So what is of great concern to your organizations with regards to the management of workforce? I mean, I'll share my opinion. I've seen an increasing concern and attention being given to well-being, and we can all agree it's because of the climate we are currently in. Please feel the need to contribute your votes. Again, you can either log on to the webpage via your web browser to www.menti.com using the access code 93299729, or you can scan the QR code displayed. Okay, for those that might be just coming, would you go back to the initial so they can see the code? So the code is displayed once again, or you can also scan that QR code there. We'll just give it another minute or two so that we can get everybody's voting. You're welcome if you're just joining today's session. We are talking on workforce management, and so we're taking the first poll of the day to get feedback from our participants. We have more people who have voted, and it looks like well-being is still the greatest concern. And I guess we can all relate to the current climate of the pandemic. It looks like more people, there's a more focus on mental well-being, and so organizations have also keyed into this. It's good to see that it's 0% for nothing. I think we would all be concerned if we had a figure there. Okay, we'll be closing down the poll in the next few seconds, 20 seconds to be precise. Okay, so definitely well-being is of great concern to organizations, and during the course of our conversation, it'll be good to see how whether the regulators and even organizations are keen into these concerns by both taxpayers and we the workforce. Thank you all for your participation. So for the next 10 minutes, we will listen to our first paper presentation on tax compliance considerations in a mobile world. And this will be delivered by the Special Advisor to the Executive Chairman of Lagos State Internal Revenue Service, Mr. Tokunbo Akonde. Mr. Akonde, you are welcome.
Thank you very much, Sarah.
We will yield the floor to you to share your presentation so that you can have better control of it. And
good morning, everyone.
Good morning, sir. Thank you.
Yeah, I will try to do this now.
Okay, so a reminder to our audience, please remember to drop your questions using the Q&A box, and you can drop comments, general comments in the chat box. These are being monitored and we will be attending to it.
So seems to be having some challenges in accessing this now.
Okay, sir.
Yeah. Can you do it from your end? Because I seem to be having some challenges in getting to the folder where it's kept.
Okay, so we'll present it. Would you like us to grant you control to control your slide?
Yes, please. I'll appreciate that.
Okay. Sir, please confirm you have control of the slide now.
Who can share? Start share. Only host.
No, so we are displaying it. So would you like to display? So we are currently displaying your presentation. You now have control of the slide.
All right, thank you. Let me see. Yeah, it's okay. So good morning, everyone. It's a rare opportunity offered by Deloitte to be able to interact with all the people that are on this platform. And I feel that it's important that we are discussing this very, very current subject, which affects most employers and employees, and also has implication for those of us that are in the regulatory function. I slightly maybe differ from the assumption that it's the pandemic that has actually brought forth this issue of mobile or mobility in employment. The beauty of it is that also that I trained as a geographer, so I know there's what we call spatial distribution of issues and things. And my take on it is that the new or emerging geography of work as we know it has started way back from the turn of the century, where essentially freelancers have been performing tasks remotely, leveraging on the capability of the internet services to facilitate their nomadic lifestyles. So when I talk of, I'm not talking of the herdsmen in Nigeria now. I'm talking of people who can work from anywhere, relying on the fact that they have access to the internet, and then they get their task done and implemented somewhere else. So working from, I will try to limit to work within the 10 minutes, and then I've broken this presentation into three: the introduction, which I've started, and then I will also try to discuss the subject within the context of a framework which guides taxation itself, with, of course, emphasis on Nigeria, and then I'll give my insights and conclusion. So basically, which is what you have here. So if you read with me, I said working from home has become the new norm for many companies around the world, including Nigeria. Like I said, the outbreak of the pandemic forced businesses to send their employees home, accelerated a rise in a remote working. So the key word here is it's accelerated. It's been there all along, but it has now become accelerated, compelling millions of business employees to go remote overnight, ushering a profound physical constraint to the workplace. Now, working remotely poses some challenges, which is what we want to discuss today. But also importantly, we should know that it also has some advantages. And the major advantage is that it allows employers or companies or entities to have access to a wider pool of talent. So I'm here in Lagos. Probably before, I'll be concerned with just having people that live and reside in Lagos and possibly maybe Ogun State, max, to employ. But now, somebody can be in Abuja or even in Kano, or even far away in Ghana, and it can provide service to me. So that means that I'm no longer limited by space. So that itself is an advantage. And then, of course, the corollary advantage of that is that you say also workers are in a position to offer their services, their intellect and their capability to a wider array and range of employers. So having maybe then let us look at what the challenges are. I've said here, the first thing to pose to ourselves is will the presence of an employee working from home state create a taxable nexus for employer in that state? Now, maybe what we need to first understand is, how do you determine what a nexus is? Nexus is the link between a taxpayer and a jurisdiction that provides the jurisdiction with the legal authority to impose its tax upon the taxpayer. There's no dispute on that. So the second question now is, for the employer, the person is paying the consideration for the services provided, identifying the jurisdiction to which you are, as the employer, supposed to pay the tax, which we would have withheld from the consideration that you have paid. That could be the salaries, it could be fees, whatever, that you have paid to this person that provided you service as an employee or as a consultant. Of course, that's essentially the area where the issues are. And then I will go further now to try and say the context within which we need to view those two primary questions. If from this slide, you can see residency is the primary determinant of nexus in most jurisdictions, including Nigeria. And laws, you can see all those things there. And it just provides us with the basis on which we know that this person is liable to tax, and then his tax is payable to this jurisdiction. That's essentially what we are saying, and that we rely so much on residency, and that's what our rules says and our laws. And it's not peculiar to us in most jurisdictions all over the world. And I've said there the issue of first day of January and what have you. So what I'm trying to bring to the fore here is that essentially we already have a framework to help us determine who is taxable and where tax should be paid to. And my take on usually is that if it ain't broke, why fix it? Because I believe sincerely that if we address the issues proactively, these so-called challenges can be managed in a way that is very simple for the company or for the entities, and painless for the employees or service providers or consultants. Because it's, I try to keep things simple because I've realized that even the most complex of the human organ, the brain, works on the simple logic of on and off, 1 and 0. So also what I've seen here is that we already have in place legal framework and administrative framework that allows us to actually simplify this so-called challenge and do it in a way that is painless for all parties. Now, we have talked of residency. I've said here that the nationality of the entity that bears the cost is also critical and important. That irrespective of the physical location of a beneficiary, the consideration, that is income, wages, allowances, fees, whatever that's paid by a Nigerian entity to such beneficiary will be liable to tax in Nigeria by the relevant tax authority. It could either be FRS or the State's Board of Internal Revenue, depending on now the condition of the recipients of the consideration, that is the employee, the consultant, or what have you. Once we have this clearly in our perspective, then I think the job is done. Copious, I've done these tables, which the participants can have a look and later on. We talked about residency, remote employees and workers, and working from home and telecommute. It's just to give a broader perspective of what I've just captured in the last couple of sentences which I gave in the last couple of minutes. So, but also what I've realized that the cross-border issues also can come from, because within Nigeria, we can easily resolve it. But if somebody has relocated outside the shores of Nigeria, but our laws also provide for that. So if you look deep enough, you will be able to see it. And then we have some guidelines from the OECD that tends also to maybe address this issue. And that essentially what OECD guidelines has tried to do is that we shouldn't go ahead to complicate matters. For, if anything at all, we should have a kind of consensus by working together that all countries, so that we do things in such a way that the so-called unplanned tax implications and potential new burdens arising due to the effects of COVID can be alleviated for the taxpayers and the employers that are withholding for the tax authorities. Now, what are these guidelines? This is what I've provided, I've stated here. The OECD has recommended that the countries of temporary residence should apply their domestic rules where we have instances where people have been, due to quarantine measures, travel restrictions, and what have you, because some people got stuck. I know a friend of mine got stuck, was in Sweden for almost 6 months last year, because couldn't just leave the place. And of course, she was able to perform some of the duties for our firm that is based in Nigeria, but she just couldn't leave where she was, but she was working there. And then also, the second one was that where you have a cross-border worker is quarantined in a country of residence and temporary out of work due to the COVID, we didn't have stimulus package here, but in some countries, in some jurisdictions like this, employers were funded by government to pay. Imagine if we had something similar like that in Nigeria, and a staff of, say, Deloitte was stranded in Ghana, but Deloitte Nigeria was still paying that person. And of course, the guy was residing in Ghana, but Deloitte Nigeria was one that was bearing the cost. The tax for that person will still be due here in Nigeria. And that's what the advice from the OECD Secretariat case. That the person should be taxed as if it was prior to the COVID-19 crisis. So the issue of residence now has been tampered with what we call temporary residency rule. Yeah, the guy was resident in Ghana for 9 months or whatever you, was providing service to the entity in Nigeria. And the entity in Nigeria was, of course, one paying the salaries and remunerations. But in that wise, what the Secretariat has advised is that it should be treated as if the rule was before the crisis. So the tax will still be due to be paid in Nigeria, where the employer has a fixed. And it tallies with what we already have in Nigeria. I think it's Peter 10, if that's section 10, subsection 1, 2, 3, and thereabouts. If you look at it, 1BM, it says that if a Nigerian entity pays, then it will be deemed that that particular income is taxable in Nigeria. And I think such simplistic, yeah, we might say, but very pragmatic approach to resolving this issue of cross-border working and the new geography of work, as I want to call it, where people can work from anywhere and what have you, I think will assist a lot in easing compliance for both the employers and the employee. The only, for most states, boss, because now somebody will not, the employee will now be treated as being out of Nigeria. And then, of course, non-resident taxpayers will pay to FRS. But if it is just within the states, within our jurisdiction in Nigeria, of course, the various states. So the implication of that is that in the long run, the taxes that were formerly collected by the states in form of pay, withholding taxes on fees and things like that, will probably not just migrate over to FRS. But don't forget, FRS is tax collector for the federation, not for the federal government. And I think that's what I always say, so people should know that. So it's for the federation. Eventually, yeah, we may disagree with the sharing formula, what have you, but essentially, when people understand that, so all these conflicts, something that I say, I just laugh. FRS collects for the federation, and that's collecting for all the 3 tiers of government. Yes, the state boss will collect for the states and what have you. So by and large, essentially, I don't see the nexus moving taxes out of Nigeria. It will still be in Nigeria. It's just that maybe the distribution will now vary because part of it will now shift to the FRS rather than from the state. And basically, that's the essence of my presentation. And I'll be more than willing to entertain any question from or any of the participants. Thank you for the opportunity to be able to be on this platform. Thank you.
Thank you very much, Mr. Akonde. It was a short session, but it was it was filled with lots of good nuggets. I mean, it's good to hear the new perspective you brought about, especially on the positive impact of the pandemic, where its workforce is being encouraged to have a wider source of generating better income because they are now able to move around and take up more opportunities. And we see that in the great resignation that we see across the globe. I mean, personally, my key takeaway was for that your comment on if it's not broken, why fix it? And I do agree with you. We do have the legal and administrative framework to tax our mobile workforce. However, it's my opinion that we probably need a bit more clarity to administer this legal framework, especially across the states within Nigeria. And it's good to see that the OECD guidelines on remote workforce were considered by our tax administrators in Nigeria, because I'm sure many of us felt during the peak of the pandemic that, I mean, the government could have shown more concern and for the well-being of taxpayers and businesses, perhaps provide more palliatives. And thank you, Mr. Akonde, for also stressing the importance of employers to track the location of their workforce. Because I mean, it's important to assess at an early stage any potential tax obligations that could have been triggered by the movement of the employees across the locations. It'll be good to see how all of this play out. But I'm still looking at the comments and the Q&A box. Please feel free to drop your comments. We have a comment here by Omowumi Hassan, and Mr. Akonde, I'll indulge you to please just take this question before we proceed into the panel discussion. And it says, in a situation where Mr. Y, who works for a multinational in Nigeria, is trapped in Ghana, but carries on work and earns income under Nigeria entity. You said the residency rule has temporarily tampered with. Oh, please, which tax jurisdiction, state or federal, is entitled to his or her personal income? So I guess the question is, if you have a Nigerian that is trapped in Ghana, but continues to carry on his duties of employment and earns income under the Nigerian entity, so would it be the state or the federal government to receive his personal income tax? Mr. Akonde, please.
Yeah, thank you. The advice, the guideline from from OECD is very clear that the taxes of such a person will be treated as a pre-pandemic taxes. That's the advice. But it's an advice, is not forced on you. You get it now. So it's for the JTB to agree to maybe adopt that guideline from OECD. So what it means is that the taxes due on that person who's trapped in Ghana will be treated pre-2020 rather. So how was his or her taxes being done in 2019?
Okay.
Do you get it now? So that one takes care of that.
All right. Thank you very much, Mr. Konde. And we will expand more on some of these comments and some of these areas during our panel discussion. So please keep your questions coming by putting it on the Q&A box. And of course, drop your comments in the chat box. Now, COVID-19 pandemic definitely caused a lot of disruptions, just like Mr. Konde has alluded to. And we've seen that the remote and hybrid work arrangements, that's become the new normal over the traditional physical presence of workforce. And of course, organizations are having to rethink the strategies around the management of their workforce. Yes, we're expecting that the upsurge in remote working and the increasing importance of employee experience, just like our votes revealed, that these will be the key drivers in the reinvention of the global mobility process. And so for us, the objective of this first panel session is to analyze these impacts of the current trends in our global mobility, vis-a-vis ensuring tax compliance of employees in both the physical, hybrid, and remote working situations. And so to join me for the panel discussion, I welcome again Mr. Tokunbo Akande, and other panel members that will be joining these discussions are Ayodeji Ajibola, who is the Director Human Resources at Guinness Nigeria PLC, Mr. Aliyu Abdullahi, who is the Tax Controller at the Non-Resident Persons Tax Office of the Federal Inland Revenue Service, Patrick Inze, Partner Tax and Advisory, Tax and Regulatory Services, apologies, at Deloitte, and Toluwalogo Dutayo, who is an Associate Director at our Global Employer Services at Deloitte. So thank you all for your time today. We have about 50 minutes for this session, for the panel discussion, and we'll appreciate if each of the panelists can limit their responses to about 2 minutes, and so that will allow us to take a good number of questions and also take a few more questions from the participants today. Welcome, panelists.
Thank you very much. I'm glad to be here.
Okay. So
thank you very much.
Thank you.
Glad to be with you.
So my first question will be for you, Ayodeji. As many professionals have identified, I mean, especially at Deloitte, we've identified 3 phases that multinationals and corporate organizations have faced with the rise of the pandemic. And these 3 phases are the respond phase, recover phase, and the thrive phase. And of course, respond, just like the name implies, is really how organizations are dealing with this present situation and managing in a view to ensure continuity. Of course, recover is to see how you proceed from that refund phase and emerge stronger as an organization and probably prevent or minimizing the impact or reoccurrence. And we've got the thrive phase. And in this phase, organizations, I mean, how they deal with preparing for and shaping into the new normal. So in your view, Ayodeji, what can multinationals do to manage these 3 phases in the bid to sustain workforce effectiveness?
Thank you very much for the question. I think it's a very pertinent one. I think it first of all starts with appreciating or identifying the implications, right, of the pandemic and remote working on the workforce as a whole. So the implications cut across a lot of aspects. If you think about contractual obligations, right, and policies and procedures which had to change or be reviewed in light of the new style of working, which was flexible working, or working from home completely. So for example, you have a contract that says your hours are 8:30 to 5 p.m. Is that really relevant in this day and age? You also have to look at the financial implications, not just in terms of increased investment in technology and infrastructure, internet and what have you, internet provision and what have you for people working from home. But if you think about, for example, overtime employees, in my sector is manufacturing. At what point does overtime kick in, right? And much as there's been a savings on infrastructure, arguably, because some people's rents were already running at the time of the lockdown, for companies now setting up about to renew, they're considering the amount of space that they actually need to continue to operate, since they expect that there are some people that will continue to work from home. There's also the implication of confidentiality of employer data and greater vulnerability to cybersecurity because people are working from home. That was also a factor. Unattended laptops, conference calls that are no longer private because they're no longer in the office necessarily. For example, implications on the performance appraisal, right, in terms of delivery of KPI and how KPIs get achieved has also changed, right? And then if you look at your line managers that manage your workforce, you also have to think about, are they equipped? Do they have the expertise to manage a virtual team, people that they do not see every day, and in some cases for months, right? Because, they're working in other states of the Federation. Employee engagement, also another implication. How do you keep employees connected, in a virtual world? I mean, I think it's easier when you have people that had joined the company before remote working became the norm and COVID hit. But for people that were employed after that time, that have not met their colleagues physically, that's a different conversation entirely. I'm in that space myself. It's been 19 months in Guinness, Nigeria. And even up till now, I'm still meeting people for the first time, the very first time, but we've been on Zoom calls, for the past 19 months. So it's a real implication in terms of keeping people connected, keeping them engaged, and building your culture, right? Or reinforcing the culture of the organization in a virtual world. Privacy also a factor, as you can imagine. Not everybody's comfortable letting people into their private space or what their children look like, which is a reality on a Zoom call, as you can imagine, or whatever, conferencing facility a company uses. Now you have people in your space. You have to, oftentimes you're on a call and, it's either, your child is crying in the background, your spouse is asking you a question, or, there are workers in your house and they can hear the hammering going on. Sounds very trivial, but these are realities that one did not have to deal with because they were physically coming to work. So there are a lot of implications. And I had to list those out, or some of them out, because they would also be factors to consider in how a company responds to a COVID or work from home situation. And I use those two terms because, yes, the worst of COVID hopefully is over, but the impact on the culture or the way of working globally, including Nigeria, I think has changed permanently. So you will see remote working will continue. There are some companies that have said they will never go back to a 5-day work week ever, right? Now, employers or employees, having seen the benefits of working remotely, are demanding for that in their terms and conditions to say, I want to continue to work remotely, at least for 1 or 2 days during the week. So it's not something companies can ignore anymore. So taking assessment of those implications, of those factors, determines how a company responds. And of course, a lot of companies went into knee-jerk mode where they had to make decisions for the first time very quickly. But in terms of recovery, it's really looking at, what are the benefits? What are the lessons learned, as a result of this pandemic, or the onslaught of this pandemic? How do we recover from that and continue to thrive in this new way of working? So like I said, yes, you can mandate everybody to come back to work, but what happens when there's a next wave of COVID, which is what we're experiencing currently? So you do need to develop and establish those protocols that would come into play when this kind of situation hits, and we may have to, go into a lockdown or a remote situation again. So it's really looking at that in terms of what have you learned, what has company learned, how do they emerge stronger, how do they revamp their culture to accommodate that, and therefore how do they prepare themselves for the new normal? So I'll keep it short. I know I have probably overrun my 2 minutes, so that other speakers can.
Thank you very much, Ayodeji. I mean, you shared some key nuggets there. And what I see here from you is that, yes, the impacts of the culture of work I mean, because of COVID, it's changed. And so, of course, and with these, the taxpayers will also have growing expectations for any policy released by the government to also reflect this change. And you've touched on those different specifics that organizations are going through. So then the duration of work, confidentiality, increased investment, both on the employers and the individuals, the workforce as well. So my second question will be for you, Mr. Abdullahi. In light of what Ayodeji has expanded on, especially from the perspective of corporations and employees, and you being the representative of FRS on this panel, I mean, we are also aware that, of course, Nigeria's projected revenue for 2021 presupposes that there'll be a contribution to that revenue by the oil sector of about 30%, and that's 70%, which is a majority of that revenue, should be from the non-oil sources. And of course, a major part of this is usually from the tax revenue. So in your view, in striking a balance between the tax regulators and the taxpayers' expectations, what should Nigerians expect in terms of the tax landscape, especially bearing in mind that we're still in the pandemic?
Okay, thank you. And good morning for having me this webinar session. Thank you, Deloitte. Well, yes, COVID-19 have come in. It caused a lot of confusion, pandemic throughout the world. So, of course, the normal taxes expectation from domestic companies, at least will be affected. But you know, once something comes in, once it is blocking this side, the other side will be open. Okay, the digital economy now is becoming the new means of economic transactions. What we are expecting in FRS, we are expanding the transaction taxes majorly. Transaction taxes like the indirect taxes, the VAT, the stamp duty, the withholding tax. Okay, so and at the same time, we are trying to avoid and reduce the aggressive tax avoidance, aggressive tax planning. And we are implementing the BEPS recommendations. So by the time you implement the BEPS recommendations, you will be able to at least to cater the problem of profit shifting by multinational organizations. You know, Nigeria, we are import dependent. Most of our taxpayers, the major one, they are multinationals. And you can imagine how much is going out of Nigeria. So if you steam the BEPS implementation, you will be able to get much without disturbing the domestic companies. Okay, there is a lot of people that are coming outside and getting money in Nigeria, easy to pay the taxes due to the aggressive tax planning or tax avoidance they're moving. So you will be expecting more implementation of BEPS. Action 4, which is talking about reducing the deduction to interest. You have already taken care of that one in 2020 Finance Act. So Action 6, which is talking about treaty shopping, at least we are facing that one. PE avoidance, some other things. So majorly, when you look at those that you have that are having these challenges, you look at the other side. The transaction taxes are there, then the BEPS action points are there. You can just implement it. So what Nigerians will expect that will be more in the implementation of BEPS in order to avoid tax avoidance and tax evasion by multinational enterprises. So that's the major. And we are improving our collaboration with the sister agencies within Nigeria. So once you have a synergy within the regulatory agencies, you can just imagine the maritime. How many of these shipping lines that are coming to Nigeria, how much are they paying? We have been lifting crude oil in Nigeria since 1960s. How many of them have paid taxes? So these are the areas that FRA is looking at. There is some on top. These are the taxes that are coming that are supposed to be due in Nigeria. So these are the areas we are looking at. The maritime, those that are lifting crude oil since 1960s, they have not paid tax. And they are taxable in Nigeria based on Section 14. So it's not that we are coming back to squander. We have already given so many incentives for COVID-19. We have defined small and medium enterprises, small companies less than 20%. So there are a lot of incentives, but at the same time, these are the windows we are looking at. Okay. So That's expectation. And then even with the non-resident individual, this is the non-resident individual that are coming in, sportmen, entertainers, another window that are just coming in. So it's another new break it can go into. So landscape that you are expecting to be in that area too. The digital companies, okay? The digital company, that's why, in fact, Apple now is the biggest company in the world, and it's a digital company. While COVID affected manufacturing, affected this one, but it's increased the other digital guys. So focus on that digital guys that are benefiting, of which you are putting that, because that one we have specific office dedicated for the non-resident. You are looking at that one. And you have put all this in on ground, and we'll be able to get much more there. And we are even doing automation. By the time you have that automation, I think it reduces a lot of leakages. It will improve a lot of taxes collections. I think, let me not exhaust my 2 minutes.
Thank you very much, Mr. Abdullahi. I mean, there's a lot of takeaway in what you've shared, and it's good to see that FRS is focusing more on plugging those tax leakages, tax revenue leakages, and looking at expanding the transaction taxes, getting more, optimizing the revenue, tax revenues from maritime. You mentioned we've got increasing sportsmen coming in and out, and so the taxation of digital companies. So as a follow-up question to you, Mr. Abdullahi, how efficient or how effective would you say is the recent enforcement drive by FRS to tax non-resident individuals, and with a focus on non-resident individuals that derive income in Nigeria?
Well, thank you. Go ahead, finish your question.
No, and so what I wanted to say was, what are the main issues that FRS has faced with regards to enforcing the taxation of these non-resident individuals that derive income in Nigeria?
Well, thank you. The effort that was made by FRS, number one, is to have a dedicated tax office for the non-resident companies, including individuals and companies. That's number one. You know, if you look at the personal income tax, 95% of PITA or 98% of PITA is being managed and administered by state internal revenue services. We are only taking just a small portion there. That's section 221B. That's what we have, the federal, Air Force, Nigerian police, and specifically 21B4, which is for the non-resident. That's one aspect of it. And maybe first schedule, fourth paragraph, which is talking about other employment. And then third schedule, sixth paragraph, 6.2, which is talking about the definition of non-residents. So these are the minor areas that FRS is just managing. And when we come to that branch employees, that are the few. The other remaining, also we are leaving to Mr. Tukumbo Akande, they are managing there. The tax law is clear. There is no confusion between the tax law is clear. The jurisdiction are there. I'm handling the non-resident person tax office, the individual. Anybody that comes with anything above 183, they will actually go to Lagos State or go to Ogun State or go to Oyo State, because it's beyond the jurisdiction of FRS. I don't entertain them. Okay, so the law is clear. The effort we have done, we have established a particular tax office for handling these things. Okay. And we have made a lot of effort there. There's a lot of decent tax we are getting. If you look at the employees in offshore platform, which are resident under economics exclusive zone, if you go back to the tax law and link it with branch employees and branch taxes, they're in economic exclusive zone. That don't belong to the federal government. Just that element portion you can take. Then go back to the non-resident. If you go back to third schedule, paragraph 6.2, which is then define 182, which is in line with the OECD model, article 15. Okay, so we have designed 183 days as this one, but 183 days is not the major thing, because that's the emphasis we are talking about. At the article 15 or OECD model is saying that when you perform the activity, that's what the assignment is performed. And then the person that is paying that, the employer, whereas the employer is resident, or if that payment is borne by a PE for that country. So when you have those things, you may have an employment remuneration borne by a PE, which may not necessarily reach that 183 days. So the 183 days is responsibility for you to file returns. That's why you are going back to state internal revenue. So if you leave that one, that gap will be moving. That will be a leakage. So other aspect are part of 183 days. You look at who is paying that money, the employers in Nigeria, or the remuneration is being borne by a Nigerian P. Definitely that money is coming to Nigeria and then it's coming to FRS because it's within the purview of that FRS. And then we have made an effort in the sportmen, entertainers. I can tell you Lagos City Marathon, we have approached them. Lagos Polo Tournament, we are ready for the December shows in Lagos. So all those that are coming to do a short time. So there's an effort we have done while challenges too. You cannot do it without a challenge. Of course, Mr. Tukubo is when I talk, you say, no, don't go there. It's my own, it's my tax. Yeah, there is that understanding within the boundaries of the tax law. There is none of the challenges. The second challenge is getting information of those people that are coming within a short period of time and going. So that's why we have a collaboration with Nigerian Immigration Service. In fact, we started exchanging information with them. We use that information, and at least I know what feedback I'm getting. Though there is a little another challenge, there's just a little interpretation of little court issues with bias. So it's something that is being handled is in court. So I don't want to talk much on that one. So there is an benefit and then there's a challenge on that one too. There's nothing you can do new without having a challenge. So the major challenge is getting information. The second one is for the states, internal revenue and FRS to understand why you're on demarcation. Why did you start? Why do you stop? That's all.
Okay, well, thank you very much, Mr. Abdullahi. I think we've heard it all. So the FRS is not here to play. And perhaps Mr. Konde, I think the next question will be for you. I mean, from a consultant perspective, I mean, we've seen a recent surge in the queries we get from multinationals, especially regarding the tax reliefs applicable to cross-border workers. And this is in particular for cross-border workers that have become stranded in Nigeria or Nigerians are stranded abroad, especially now that many companies have adopted the remote working arrangements. Yes, some of these reliefs, you've highlighted it in the course of your presentation, but we'll also like you to expand more that what are the tax reliefs that are available to cross-border workers that may have triggered a taxable presence in Nigeria on account of the extended duration of stay within the country. And how effectively have tax authorities been applying the provisions of Section 11 of PITA, the Personal Income Tax Act? So Section 11 provides for unilateral tax relief for taxing resident individuals that have suffered tax on their foreign sourced income. Mr. Konde, please, could you share your comments on that?
It's very simple and very straightforward. The law is quite clear. If your earnings from outside the shores of Nigeria are brought in through the appropriate channels, government-approved channels, then they are tax exempt. I don't believe any tax authority in Nigeria will tax you if your remunerations will come through your maybe DOM account. So I know it's in place, and once it's properly disclosed and there's documentary evidence to support it, it is granted. Now, also on the issue of reliefs, I think it's something that we gave a lot of publicity to this last year for pandemic tax relief, which was done by not only Lagos State, even I think FRS did the same, and then some other states as well. And basically it revolves around maybe unconcluded tax investigations or audits. And then of course, you can see the effect of FA 2020 was also to grant relief to those people who are at the bottom of the pyramid, at least people on the minimum income level, which I think everybody has implemented. We have issued a public notice to that effect. And then also, we have, even prior to the pandemic, we had tried our hands on remote or reconciliation. which of course we now formalized when the pandemic set in. And essentially, I think at the state level in Lagos, which I can speak for, within the ambits and provisions of the law, all those reliefs that are supposed to be granted have been granted. And then, as like I said on Section 11 of Peter, we have always implemented that in Lagos State. I can't talk for others, but I can talk for Lagos. We have always implemented it prior even to the pandemic. And of course, it's there, it's the law. So we comply with it. Thank you.
And thank you, Mr. Konde. And perhaps a follow-up question would be, would you term those foreign incomes, like for individuals that might be stuck outside Nigeria and they're still earning income, would you, in your opinion, term them as foreign income?
No. Income that is paid by a fixed-based company in Nigeria is not foreign.
Fantastic.
It is not.
Thank you very much for that clarity. And I mean, thank you for at least shedding more light in that. And you raised some concerns that some individuals, I'm sure, on this call previously had. So my next question will be, and it'll be to get Tolu Walugo's perspective. But perhaps, Tolu, before you do comment, again, participants, if you have questions, please use the Q&A box to drop your questions and your comments in the chat box. So Tolu Walugo, from your experience managing several corporate organizations with multi-jurisdictional footprints, and of course, handling complex mobility portfolios at Deloitte, what are the strategies that can be adopted by multinationals to mitigate the likely exposures created by expatriate movements across jurisdictions?
Thank you very much, Sarah, and good morning, everyone. And thank you for joining this webinar. That is a very pertinent question at this time. And like you alluded to earlier on, we've received such queries more recently than ever before. So what strategies should organizations, especially multinationals, who definitely are caught in the middle of this, what should they be thinking of? Number one is a better handshake with their global mobility team. So that right now we're already knowing fully well, we are reconfirming who are the people on assignment in any jurisdiction. And if it has to do, not even about Nigeria alone, which of the Nigerian employees or assignees have gone out, who is in, what countries are they coming from. It's very good to start having those handshake so that we are not caught unawares and we are not left stranded when we just realize that somebody has created a tax residency, like Mr. Konde called it, a temporary residency in another jurisdiction. So that's one of the things I would say. Number one is they need to have like a dashboard to gather data. I know that Mr. Ali, you said it earlier on also, that one of the challenges FRS is facing is ability to actually gather information of where all this, where people are and where this is emanating from. So one major strategy I will propose is to have like a dashboard just to capture in all, where are my people sitting, especially expatriates, the ones who had to go back during the course of the pandemic, what countries are they in? Because when we gather that dashboard, then the next thing will be education or fact finding. And that fact finding, we at Deloitte can help you with that, because there's a need to consult and consult and consult. Meaning, if expatriate A who is on the Nigerian entity's payroll or whose income is being borne by a Nigerian entity, if he has stayed in UK for a while, has he created a tax residency in that state? Yes, OECD said if people being stuck in various jurisdictions is strictly as a result of the pandemic, then things should remain status quo. But with the elongated time, we are beginning to see people cross all the residency rules, by the virtue of the fact that they are working virtually from another jurisdiction. And in consulting and making research, one of the pertinent questions is, does that country where they are seated, their home country or otherwise, do they have double tax treaty with Nigeria? If not, have they indeed created double taxation? Who has the first right to tax? You know, and then will credits be available? I was glad when Mr. Akode said, okay, all those will be looked into. Yeah, we are still looking forward to seeing, you know, well spelled out guidelines to tackle this. But in the meantime, what organizations should be doing, especially as we move towards filing, is to say whose income is still gather information, have a dashboard, determine whose income is still being borne by the Nigerian entity, determine whose income is being borne by the outside jurisdiction entity, and more or less put all that together, and please consult, so that we are not sitting on gunpowder, so that when all this is over, we are not in for tax liabilities and across various jurisdictions. So let me stop at that. I can provide more insight as we move on.
Thank you, Tolu Alugba, and of course my panelists for being very time conscious. And Tolu, riding on your comments on the need to have a dashboard and track the location of workforce, especially having regular consultation to be able to assess the taxability of these individuals, and ensuring that you file to the right tax authorities, and of course avoid penalties and interest as such. I'd like to revert back to Mr. Abdullahi to get his perspective on this. I mean, we've seen a lot of circulars being issued by the FIRS. And in your opinion, Mr. Abdullahi, do you see any conflict in the introduction of the significant economic presence rules to the taxation of non-resident individuals that provide technical management, professional and consultancy services to Nigerian residents, especially where these NRIs are based in countries that have double tax treaty agreements with Nigeria?
Well, thank you, Sarah. You know, as I said earlier, taxation is based on law. By the time you have tax treaty, normally tax treaties supersede the domestic laws. So the introduction of SAFE have no any conflict with the tax treaties. Nigeria will have tax treaty with only 16 countries, I think, as of now. So you can imagine the number of the countries that are remaining in the world. So even if you are talking about treaty with SAFE, you are just focusing only on 16 countries. You know, we don't have a treaty with US, we don't have with India, we don't have with Germany. So think of this big economic world. So going back to those that we have tax treaty with them, there is a channel of claiming treaty benefits. Treaty override domestic tax laws, no argument on that one. If you are a treaty partner, you are from a treaty country, there is a channel that you can claim the treaty benefit. So you have a procedures. You have to provide the certificate of residency. You have to bring it, you have to confirm by both tax authorities from your home country and Nigeria. So once you establish that, fine, you are from a treaty partner, of course, we can give you that treaty claim. You can take that one. But there is no conflict. As I said, the laws are clear. Okay, they are clear, there is no ambiguity there. So treaty claim, there is a procedure for it. You have the form, you can download it on our website, fill it, take it to FRS, sign it for, take it to your country to sign for. We need to confirm, if you are coming from UK, for instance, or Canada or France, we need to confirm that the tax authority of France or UK or Canada confirm that you are a tax resident of that country. You can give the treaty benefits. So what we need to establish, you are from a treaty partner, and the procedure is established. You need to provide what we call certificate of residency. You are qualified. That's no conflict. Thank you.
Thank you very much, Mr. Abdullahi, for that professional insight. And my next question will be for Patrick. I mean, over the past 2 to 3 years, we've, of course, in line with best practice, federal government of Nigeria has carried out yearly review of our tax laws, the fiscal policies. And early this year, we've had the Finance Act 2020. Of course, that touched on both the corporate and the individual taxpayers. So Patrick, what is your own assessment of the impact of Finance Act 2020 on personal income tax, bearing in mind the overall government policy drive to ameliorate the effect of COVID-19?
Thank you, Sarah, and good morning, everyone. So to better appreciate the question, it is important to look at the specific provision, the specific fiscal incentive provided by Finance Act 2020 to understand the distribution so that we can make an informed judgment. The Finance Act 2020 introduced about 80 amendments to the existing tax and regulatory legislations in Nigeria. The aim is obviously to address ambiguity in the tax laws, clarify certain provisions, and above all, provide incentive to taxpayers just to reduce the impact of COVID-19. Additionally, Finance Act 2020 introduced the Crisis Intervention Fund and on the Unclaimed Dividend Trust Fund. The funds were primarily to address the impact of COVID-19. Then looking at the Finance Act 2020, it covered 5 broad areas, but we're going to be discussing the first, which is introduction of counter-cyclical measures and intervention initiatives. There are other 4 areas having to do with mass transit, institutionalizing ease of doing business, addressing key procurement reform and fiscal responsibility. So looking at the counter-cyclical fiscal measures, so what gave rise to that? In 2020, all economic indicators were pointing to the left. So COVID-19 affected the economy massively, not only in Nigeria, but global economy. There was contraction in the economy by 6%. Inflation rose to an all-high 16%. That was the highest in 3 years. Unemployment rose to about 27%. Public debt increased by 18% from 27 trillion to about 32.2 trillion. Global trade was affected. Exports reduced by 45%. So the federal government thought it wise to introduce these fiscal incentives. So looking at the fiscal incentives, there are specific provisions. The first one was treating as tax deductible donations made by companies to the Crisis Intervention Fund. This was targeted at companies. The second one, reduction of minimum tax rate from 0.5% to 0.25, targeted at companies, excepting small companies from tertiary education tax, and then recognizing email and other electronic communication as a means of objecting to tax review and all that. Then we have incentives relating to exemption of compensation for loss of office up to amount of 10 million. Then low-income earners, those earning minimum tax, we are exempted from tax. There was VAT exemption on air flight tickets. There was cuts on duties and levies, importation of vehicles. And so looking at all this, you have individuals covered under the personal income tax. They have reliefs specifically targeted at them, like the exemption of compensation for loss of office and exempting low-income earners. However, there was this belief that Finance Act 2020 considered corporate organizations more than individual taxpayers covered under the Personal Income Tax Act. And what gave rise to that is the amendment to Section 33(2), which redefined the gross income. So what is the implication on taxpayers? Means that the gross income, which is the basis for calculating consolidated relief allowance, you need to deduct tax-exempt items provided under Schedule 6. And so the implication is that the 20% relief earlier granted on payment like pension and other tax-exempt items will no longer be available to the individual taxpayers. And so the implication will be that there will be high effective tax rate and less disposable income. And so it's on this basis that individual taxpayers felt that they were not catered for in the incentives provided by the Act. In their words, they feel that the Act, merely cut back on the relief provided and expanded the tax net and only recognized a section, and that is the low-income earners earning minimum wage, which is currently at 30,000. So they are looking forward to more incentives, to actually cater for them. So they felt that no matter how logical that amendment may sound, no matter how reasonable it may be, yes, we try to align with best practices. They felt that it was ill time. And so when we are talking of granting relief to cushion the impact of COVID, and now we are paying more taxes. Okay. So I think that single amendment is the issue. And I think that's the area that most companies will face in tax audits to come.
All right, thank you very much, Patrick, for shedding those insightful provisions of the Finance Act 2020. And this will be a good time to hear from Ayodeji and just to get the industry perspective. I mean, considering many employees had a marginal increment in their tax payments this year, especially since the implementation of Finance Act 2020, how well, in your view, have companies adjusted to or adjusting to the impact of Finance Act 2020, especially on payroll tax and the management of the employees' expectations?
Thanks for the question. I would say first off, I can't speak for all companies and all industries, right? Especially considering that industries or sectors were hit differently, by the pandemic. And, some are still reeling from the effects, it hasn't quite gone away. But if I use best practice and where I am currently as an example, first of all, of course, it was a law, right? It wasn't a directive, it wasn't a recommendation, it was a law that one, of course, first off, had to comply with immediately. So if I remember, we saw clarity on what the law, the interpretation of the law. And once that was clear, we had to actually backdate the tax deductions up until the effective date of that law, which of course was like a double hammer for employees. But, I think sensitization was important in terms of, sharing with people what the law stated, the implications, and which is why this action had to be taken. And I think in terms of how do you keep employees motivated? Because for individual taxpayers, as was mentioned earlier, it was bad news, not only on future earnings, so in other words, final entitlements at the time of exit sometime in the future, right? But also on current earnings or take-home pay, which was badly hit across the economy. So I think it was just a good opportunity to really look at, the employee value proposition for organizations. And what that means in effect is that, look, companies would not always be able to compete on pay. So, for a lot of companies, it wasn't just, okay, we'll just pay people more. I mean, where is the funds for that coming from? Because of course there was the pandemic to deal with, and the results of that, especially in sectors that were shut down, that are not IT, non-IT sectors especially. But we had to go back to look at the employee value proposition to say, what else can we give employees, tangible and non-tangible, right? That will basically, boost their morale, increase their motivation, and give them more reasons to remain in the organization. Because my mindset as a HR practitioner has always been, for some companies they feel, or for some HR practitioners, or for some companies they feel, well, it's an employer's market, right? So it's our free choice to decide who we hire and who we don't. There are many options. My view has always been, well, it's an employee's market, especially for top, strong talent, right? So in a talent market of, say, 100 people, everybody wants the top 10 or top 5. So those top echelon of employees actually do have a choice as to where to work. And it's up to the organization to give them a reason why they should work for that organization as opposed to another organization that is also, has an offer in front of them. So I think competing in terms of culture, competing in terms of support and assistance, I found that mental health really came to the fore during the pandemic, for obvious reasons. So really providing a lot of assistance in that area, counseling services that were paid for by the organization, checking in, more activities and initiatives around keeping that engagement going, so that, when we did an employee survey, a very, very key strong point for the organization was just the culture, having that culture where they feel that they are looked after, they're taken care of, the company listens, there are fewer silos, there's less hierarchy, things like that. So, and even when I think about people that have left the organization and, indicate an interest to come back, we post job offers and we see ex people applying, but conversations with them is really around the culture. They just missed that culture and they didn't realize how much they appreciated it until they no longer had it, right? By going to work somewhere else or the other. So I think it's looking at other things organizations can provide employees in the absence of, in light of the reduced take-home pay it is that they have. And of course, where they can cushion that by paying more, in terms of adjustments, then of course, gladly, but also appreciating the fact that not all organizations could do that.
All right, thank you very much, Ayodeji. I mean, it's clear that the increase in tax for employees, I mean, organizations have had to step up to cover some of those gaps in a bid to be able to secure, especially what you said, top talents. So my next question will be to Mr. Akonde. Mr. Akonde, how would you gauge the level of compliance of taxpayers in Lagos State with the provisions of Finance Act 2020, especially in light of what Ayodeji has mentioned? And added to that, are there specific guidelines or concessions that LRS intends to issue to help taxpayers better manage their tax portfolios?
Thank you again, Sarah. Essentially, the truth of the matter is that immediately the FA 2020 came out, we issued a public notice and did some engagement sessions with, I think, NECA. So from our side, basically also, without fear of anything, we drove that amendment because of the issues we've had in the past on it, so that there's need for clarity on what is proper and what should be done. Now, we didn't anticipate the pandemic when we were actually pushing for that clarity in definition of what gross income should be. Now, be that as it may, what we have noticed, at least from the monitoring that we have, is that we have had appreciable compliance by the top taxpayers in Lagos. And that is quite commendable. And so it's because, like one of the panelists, I think it's Did I said it here. It's basically the law, so it's not a guideline, and it's not an advisory. So you just have to maybe comply with it, so that you don't run foul of the law. So that's, I think, I need to put out here that from the ones that we monitor closely, we've seen appreciable compliance level, which I said is quite commendable. So that's what we have done. And essentially in terms of reliefs, because we are guided by provisions of the law as well, what we can tweak with are those administrative issues, like maybe in terms of granting concession on payment of what is due in installment, which we do on application, waiver of interest and penalty on late, at least late remittance, if it is brought to our attention, because there must be some level of engagement between the tax authority and the taxpayers. As long as we are privy to the challenges that the taxpayer is going through, then it gives us room to actually maybe waive some strict, in quote, provisions of the law. So that don't forget, we're working for the state and working for everyone, and then we must be seen to be doing the right thing and in compliance with the law. So once we have all that, I think we are not too rigid in the implementation of most of these things in Lagos, and we have always given concession in terms of maybe filing of returns and things like that. It is something that is there on the table. However, it has to be seen that it is done transparently and it is through documentary activities that we can get this thing done. Thank you.
Thank you, Mr. Conde. So I have a question here that probably flows into this comment you've made on the extent to which Lagos State as a tax authority can, of course, modify the implementation of the administration of the tax law in its state. So we have someone asking here that, I mean, we have more people working remotely. And so, of course, there are challenges, especially as Ayodeji has already highlighted, with tracking these individuals and getting the information. And so with people working more remotely, there's going to be more difficulty coordinating in a bid to meet those filing deadlines. So are there considerations for penalties and interest for lateness of either the filing or the payments? Will there be considerations to relax on those timelines and penalties that were imposed as a result of the pandemic? Because we're still going through it even into the next year.
Yeah, there is no open-ended concession on that. The key is communication. Yeah. And I can assure you, for those that have been, because it's also something provided for in the law. Even if I owe anything and I'm not able to pay now, you understand? As long as the creditor is able to understand that that is my current situation, I think there's always room for this. So the key thing for most taxpayers is that they should not shy away from engaging with the tax authority. And that, I can tell you, is the decision we have. We have instances I can give, of course I can't disclose that now, of people who have had challenges even in remitting taxes that they're supposed to have. If you have paid your employees, ideally you should remit your tax. But if there are financial challenges due to whatever reason, not even only the pandemic, as long as there's a level of engagement, because for most taxpayers in Lagos, you have a dedicated account officer who provides all this service. So it's just a matter of communication and engagement. Thank you.
Thank you very much, Mr. Conde. I was going to come around to you on how what strategies companies should put in place to manage this, the streams of tax audit exercise. I mean, we've now seen more of the tax audit exercise go in the virtual mode. And so perhaps Patrick can take this and then we can get Mr. Conde's concurrent view. So Patrick, from your experience in managing tax disputes, what strategies can companies put in place to manage this, the stream of the tax audits and the different, like the management of the virtual tax audit process we now see that is in place?
Thank you, Sarah. In compliance with the World Health Organization's rules with respect to the pandemic, various restrictions were put in place by different countries, and that also affected the tax authority, and of course, they have to put on hold on tax audits. In 2020, yes, there was a number of administrative incentives, more like delay in tax payments, waiver of interest and penalties, and shifting of deadlines. But in 2021, you see those administrative incentives are no longer there. And so what we see coming up is a tougher enforcement and tax audits, so to say. So
Okay.
to manage tax audits, organizations are advised to do the right capacity in terms of staff to manage that. They are expected to keep adequate records. And now that we have remote audits, the record should be robust enough to speak for itself. They're also expected to file returns at the right time, carry out year-end review, and consult when necessary. You can agree with me that compliance starts with self-assessment, right? And so knowing that if there's any gap, that will be picked during tax audit. So for the streams of tax audit that will come, we'll see a number of issues related to COVID-19, like remote work, stimulus payments, allowances paid during COVID. Those challenges and issues will come up in the streams of tax audits that we're going to see. I'm happy when Mr. Konde was talking about OECD. I know it's persuasive, but from the way he spoke, I know they've adopted that. We expect that revenue authorities in other states will actually adopt that. So
Okay.
it's important. It's important to mention that yes, organizations will be facing new streams of tax audits, but they're overwhelmed by the outstanding audit that's not been closed out. And so we expect that revenue authorities should really focus on closing out the outstanding audit. There should be an estimated time, more like, we know that audits differs in terms of complexity, response by the taxpayer, and availability of documents. But there should be an estimated time where if an audit is fed into the system, we know the expected time that, the audit will be concluded. When Tolu was speaking, she spoke on dashboards. So we expect that there should be a dashboard to monitor when an audit is fed into the system. A situation where an audit stays for about 3 to 4 years, it's really overwhelming on the taxpayer.
Thank you, Patrick. And because of time, we'll quickly take closing comments from Ayodeji and Mr. Abdullah. So Ayodeji, what will be your closing comment, especially from an industry's perspective, what you expect to see going forward?
Well, I think going forward in terms of future trends, work talent mobility, like I call it, is here to stay. We will continually have situations of people either working virtually within Nigeria or, for brief or longer or not so brief periods of time outside Nigeria. So when Toluwalogo was talking, made me smile because I know how many fire on the mountain scenarios I had to deal with someone, suddenly working from Canada, for example, and things like that. So talent mobility is here to stay. I think more and more clarity from the tax authorities, both federal and state, on how to handle such situations, will be helpful in a way that will be win-win for both employers and employees, right? So I like how Mr. Akonde spoke in terms of, okay, coming to the table, having that conversation, reaching agreements. I think if the tax authorities operate with that mindset, continue to do so, then it will be beneficial for all parties involved, and also for the employees, especially for the employees as well, who at this time are afraid of declaring their outside Nigeria status, because it's just not clear what the penalties will be. And then in terms of the Tax Act, like has been called out in the session, more concessions seem to be given to companies as opposed to individual employees. Whatever reliefs that we can continue to provide individual taxpayers who form the bulk of the funding for a lot of our government projects would also go a long way and be helpful and really help to boost that morale it is that we want our employees to have, so that they can be productive, right, and keep working and continue to generate more in terms of tax as well. So looking forward to that continued partnership.
Thank you very much, Ayodeji. We'll take Mr. Abdullah's closing comments.
Okay, thank you. Well, all of we are talking about tax authority. I want to use this opportunity now to call on the taxpayers themselves, taxpayers and the employers, at least to be voluntarily compliant. Okay, they should encourage voluntary compliance, because all what we have been talking about, the authorities, taxpayers themselves, they should at least be honest, dedicated to voluntarily comply with the law before waiting for the hammer to come. So on the tax authorities, I'm calling for a synergy, working synergy between the tax authorities, the federal and then the state internal revenue service. And then the implementation of the guideline of the OECD. When the OECD comes, it's all to avoid double taxation. All what we are trying to do is to avoid double taxation. So we can come using under the forum of GTB as the point where all the tax authorities are meeting, FRS meeting them, so we can analyze. When we exchange information, at least we'll be able to take the maximum tax we can be able to get from the taxpayers. And it's a benefit for the taxpayers. We are just collecting agents. We collect and take it back to the government. And we believe the government is working for the taxpayer. So that working synergy and exchange of information is very vital. That's what I'm just encouraging. That's my concluding remark. Thank you.
Thank you very much, Mr. Abdullahi. I'll just give Toluwalogo 20 seconds to give a closing comment.
Thank you, Sarah. So for me, it's just to, and I won't say anything to the tax authority again, so that Mr. Ali will not bring sledgehammer like he has threatened. But just to say that one of what we thought when we were putting this together is to say filing is coming. So it's just to reiterate to taxpayers, especially employers of labor, HR directors, tax managers, that this is the time to start gathering information. From our work, we've seen recently that almost all the states have either included one thing or changed the mode of filing across the 36 states, so including FCT. So it will amaze us that what we filed last year in 2019 is different from the requirement for filing this coming filing period. So it is very important to consult, to gather information. Like I said before, we at Deloitte had done a compendium earlier on to talk about all the incentives across all the states. And we're going to have a compendium like that also to talk about all the requirements for filing. We just don't want to have to pay unnecessarily penalties, especially now that we're working from home. One receipt is sitting in somebody's inbox. Maybe the person has even resigned and gone to Canada. This is the time to actually start collating that returns, not January, this December. Let's start putting all those information together, know exactly where our people are speaking. Like they just said earlier on, somebody's already in Canada. But this is the time to put all those information together to also confirm. Please get your consultant. You can liaise with us to know exactly what is operating in each state, so that, like Mr. Aliyu said, we can be compliant and know all that we need to know. Thank you very much, and thank you once again for having me.
Thank you, Tolu Alogo. I would like to say special thanks to our paper presenter, Mr. Konde, and our very elucidated panelists. It's been an interesting first segment, and sadly we've come to an end of this first part of it due to time constraints. So I will now yield the floor to my colleague Oladayo Ibrahim, who is a manager in our Deloitte Immigration Services team, to anchor the second segment of the webinar on immigration.
Thank you, Sarah. Good morning, everyone. Right now, we'll proceed with the second presentation for today, and we will be focused on this presentation on the immigration aspect of regulatory consideration in Nigeria. Sequel to the gradual return to office environment, remote working, hybrid working, many offices have now opened up, but with a consideration on immigration compliance to ensure adherence to the rules and regulation and even the extant laws. To share some insights on navigating COVID-19 compliance issues, we have a representative of the Nigerian Immigration Service with us, in person of Mr. Chukwuemeka Patrick Pius Obua. Mr. Chukwuemeka Patrick Pius Obua, as we fondly call him, CPP, is the Deputy Controller of Immigration and also doubles as the reform champion for the service. Mr. Obua will be speaking to us for 10 minutes on the changes in the architectural landscape of migration, practice, and regulation in Nigeria. Over to you, DCI Obua.
I've just unmuted myself. Is that okay?
Yes, we can hear you. Over to you. You also have control with the slides.
It's okay. First of all, let me extend the compliments of the Comptroller General for affording me the opportunity to be on this program. I've enjoyed the previous ones, and I pray that you enjoy what I have to offer you here. The topic is challenges in the architectural landscape of migration practice and regulations in Nigeria. Oh, sorry, I just lost my, in Nigeria. How do I control the cursor, please?
You have control. All you just need to do is click on the next slide. Either you use the arrow down button, it takes you to the next page.
Okay. Yeah, I wish to begin with the mission statement of the NIS, which is to strengthen the security and prosperity of Nigeria through proactive, effective, and efficient border security and migration management. This aptly captures the drive of the service to enhance migration management in line with international best practices. The 2015 Immigration Act has set the ball rolling by creating a new directorate with 2 divisions, known as the Directorate of Migration. We have the irregular and regular migration, and it's headed by the DCG. Part of the changes that we have experienced since the introduction of the 2015 Immigration Act and coupled with the Presidential Executive Order 1 is that having to do with the visa on arrival policy, which is an online based facility which can be accessed with the official website. www.immigration.gov.ng. Before now, there was nothing of this nature, and it was just the normal way expatriates or visitors to Nigeria, go to every embassy to queue and to get their visa. But with this, you can access the facility online. The facility is not only extended to foreigners, but also to Nigerian children with Nigerian parentage in the diaspora who, for one reason or the other, cannot access the Nigerian e-passport. They can as well be applied for by their parents, who can access the facility through different websites to the one I just mentioned, saops@immigration.gov.ng. We also have the automated TWP. Before now, the TWP is applied manually, but now it's fully automated and can be accessed through the email OE@nigerianimmigration.gov.ng. And of course, there's a timeline for it, 2 working days, if no local objection, that is NLO. And then, of course, we have the STR visa subject to regularization. It is both automated and manual at the same time. The application begins online by completing the immigration form IM22. And of course, payment too is made online. When you complete that aspect of the application, you now add other supporting documents and make yourself available at the nearest immigration office. The reason why it is not fully automated is because we have to take the biometrics of the expatriates or the applicants. There are certain instances whereby the particular mission may not have the biometric machine. And so such biometrics are taken on arrival of that particular expatriate in Nigeria. We also have the visa on arrival. Arrival in Nigeria by Nigerians who either have lost their, whose passport have expired, and due to the COVID-19 pandemic or any other reason, or scarcity of the booklet or production material, they have to arrive on their expired passports. This was never in place before, and this category of Nigerians can apply via the email expired ppt@immigration.gov.ng. Other innovations that have been made to be in line with best practices is to liberalize the conditions of immigration-wise of spouses to Nigerians, or even Nigerians who find themselves in countries that do not allow dual citizenship, for the purposes of their coming in and out of Nigeria conveniently without necessarily going to queue at any embassy abroad. They are given a special kind of visa that grants them the status of indefinite stay, as it were. The new visa policy, which was rolled out by the NIS, was driven by the desire to increase foreign direct investment. It was also aimed at encouraging rapid industrialization to increase Nigerians' employment rate, boost the tourism sector attract skilled professionals into the country. We have other reforms in the area of the e-passports. These reforms were aimed at strengthening document security and at the same time enhancing citizens' diplomacy. It came with timelines that are far above what we had before. But just like it has been explained by the Honorable Minister of Interior, Benny Aregbeshola, that the timelines does not mean that it must take the 6 weeks for fresh applications or the 3 weeks for reissue. What he's saying that barring any hitch in the production line, availability of booklets, and document integrity, that is screening and verification of bidder documents supplied by applicants, that is, the fresh application should never go beyond 6 weeks, and that of the reissue or renewal of booklets should never go beyond 3 weeks, as the case may be. The NIS has placed some redress mechanisms whereby members of the public who are not satisfied with the services they are receiving at every point, both at home and abroad, can call this the virtual number of our contact center, which is given on the screen there. And then, of course, we also have the NIS Chat Room. The NIS Chat Room is an interface located at the passport application portal. By the time you approach this passport application portal, you see an icon at the bottom right-hand corner. If you click on that icon, it ushers you into the chat room, whereby you begin to chat in real time with immigration officers on any issue that is bothering you, or any hitch you are having with any application you are making in respect of immigration facilities. And of course, we have the NIS Servicom email, which is also provided here. You can see it on the slide at the bottom. I've left where the screen is. I'm at the very bottom of my presentation. And of course, you have the NIS Reform Champion at immigration.gov.ng email handle, which have been operating. All the complaints I've been receiving there, I've been addressing them to the best of my ability. In a nutshell, and within the time frame given, these are some of the innovations that have been introduced by the service to meet up with best practices, and at the same time to respond to the ease of doing business directives from the federal government. Thank you.
Thank you very much, CPP. Thank you very much for your time. One key thing that resonated with me while your session was ongoing was the fact that you said there's an option for visa on arrival for foreigners with Nigerian descent before, and then also for children below the age of 18, because what we have now currently with the visa on arrival option, or the first visa on arrival option, is the fact that any child that is below 18 cannot utilize this, and we're happy there's already an email address that can be used to contact the service. Thank you once again. And before we move on, we have a question here, and also to all participants, please do not hesitate to drop your questions in the chat box, and we'll pick it up. The question we have here, sir, is from Abigail Ukwaro, and she says, does the visa on arrival apply to Kenyan citizens traveling to Nigeria?
The visa on arrival is not restricted to any nationality. It's open to every nationality, Kenyans inclusive.
Okay,
Yeah.
Thank you very much, sir. All right, so the next item on our agenda is for us to have a panel discussion, and the panel discussion would further, our panel discussion would further expatiate on the topic that has been taken by CPP Obua. The focus of a panel discussion will be adaptability to the new normal. We'll be looking at how companies can adapt to the new normal, and we'll be looking at it from three perspectives. From the industry or company perspective, we'll be looking at it from the regulatory perspective, and then also we'll be looking at it from the aspect of a consultant. Also, we'll be looking at how remote work, or the impact of remote work on the operational cost of companies, and also with the introduction of remote work, could it bet more automation? Those are all the discussions we would be having during the panel session. To also join me on this panel session, I would welcome again Mr. Chukwuemeka Obua, the Deputy Comptroller of Immigration, and other panel members to join on this discourse. We have Benedict Ashikodin. Benedict is the Human Resource Manager for Oceaneering Services Nigeria Limited. And we also have Lucky Sada. Lucky Sada is the West African Immigration Lead for Deloitte. But before we go in fully into this second panel session, I would just want us to take the poll showing on our screen right now. Let us please take a quick poll. Just similar to the first poll we had, we can either log into www.menti.com and type in the code 93299729. Or preferably, we can scan the QR code. And the question we'll be considering will be, how would you rate the impact of remote work on your company's operational costs? How would you rate the impact of remote work on the company's operational costs? Is it reduced or is it increased? So I think we can start voting now. In a couple of seconds, we'll go to the results page for us to see what we have there. So we'll leave this here for any participant that intends to vote. So you can either scan the QR code or you can go directly to the website, www.menti.com, and you type in the code. We'll allow for 10 seconds more before we go to the results page. Okay, so we have about 36 people that have voted. I think we can still keep voting. And what we can see here, you can see about 68% of our participants have opted to say it's been reduced, while we have about 18% saying it's increased, and about 12% are opting that it's remained the same. Okay, I think the numbers keep increasing. How would we rate the impact of remote work on the operational cost? Looking at it, remote work, a lot of people will say with remote work, you get to cut out a lot of costs. Employees are not in the office. Some costs that could have been charged based on the number of employees on ground, the number of floor area covered, all those are taken out, and it appears the company will have a reduced cost. On the other hand, some companies will say they need to cater for how the employees will work remotely, because they will not want any excuse of not delivering on deliverables. And then for that, the company tends to incur additional costs to ensure employees are well settled. Okay, so it looks like we still have it reduced, taking the day with 72%. We'll take it back to the page for the poll for participants that are just joining, and allow another 20 seconds for us to just scan the code, or we'll go in directly to the website. So we are looking at how would you rate the impact of remote work and the company's operational cost. Okay. Okay, see the numbers still coming in. We have about 50 participants now, and 74% are still saying the cost has reduced. So I think that is enough to drive home the point that the operational cost has greatly reduced with the introduction of the remote work arrangements. We would also deliberate more on this during the panel discussion. Okay, so right now, going straight to the panel discussion. Benedict, I would like to start with you. From an industry perspective, considering reduction or the quest for reduction in operational and employee costs, just like we have seen in the poll, about 74% opting that the cost has been reduced. Do you think the consideration for a fully remote or hybrid work option on an indefinite basis is actually achievable? Benedict. Hi, Benedict, can you hear me? Okay, it appears Benedict might be having some technical challenges. So I'll get back to you, Benedict, once you come online. Okay, so my second question will go to CPP Obua. With the increase in remote work arrangements, as we have now, is there actually a consideration by the federal government through the Nigerian Immigration Service to consider a work permit category for remote work or for remote workers?
Yeah, I saw that remote work or nomad permit or visa or whatever. I saw it for the first time when I was doing a research for this. Nigerian has not considered it in any way, and it has never been discussed at any of the management meeting with the NIS or even at the ministerial level. So it's not being considered for now, to the best of my knowledge.
Okay, thank you very much. So if this is not being considered, and looking at the reality or considering the reality actually, which just like other at the first panel session, remote work is here to stay. So how is there a consideration? Luckily, you are also the reform champion for the Nigerian Immigration Service. Is there actually a consideration around this?
No, definitely. Doing my research, I discovered that a whole lot of countries have keyed into this nomad visa or remote work individuals who are foreigners, and it's one issue that I would definitely take home to management to seriously consider, because that's the way the world is going. Since people can no longer, due to the pandemic and all that comes with it, the gathering in one place and the rest of it, I saw that a whole lot of countries have keyed into it, and I would advise management to very quickly set up a structure that will interrogate it and advise government. It's not within the purview of the NIS. The NIS will consider it, make a presentation, a proposal to the minister, who will now take it to the State Council for consideration.
All right, thank you very much. Just to Benedict, I see you are back online, but before I come back to you, I just have one more question for CPP. Okay, so at this point, if you are going back to give this directive or give this advice to the Nigerian Immigration Service, what will be your advice now as the current best practice for companies that are considering remote work for their employees or for their expatriate employees, as the case may be?
Hello, there's no denying the fact that the way of doing business and the way of work has changed as a result of the pandemic. Like during the lockdown, And I believe that with this new wave that is making the rounds, movement of people definitely will be restricted. I understand that some countries have already started shutting their doors on certain other countries until this new wave passes by. So it is the way to go. Is the way to go. Otherwise, the country will be lagging behind in the new order that we are beginning to experience. Before now, the NIS has left everything concerning the COVID-19 pandemic and the restrictions and lockdown to the NCDC. But from what the little research I've done, the NIS has to be proactive in aspects that affects it. And this aspect of this nomad visa or residency, as the case may be, for remote workers should be seriously considered.
Thank you very much, CPP. Benedict, can you hear me now? Hi, Benedict. Okay, it appears Benedict is still not back. Okay, so let me just move on. My question now will be directed to Lucky Sada. Lucky, just a quick one. How do you think more automation in the regulatory process would improve service delivery?
Yeah, thank you very much, Oladayo. I was actually impressed with CPP when it listed the number of steps that have been taken by the NIS to automate some of the processes we have in the space. Even though we want to say steps have been made, but I want to quickly state here that the race to embrace automation started a very long time ago in the Western world. And we as a country have just arrived at the track side, and we've just been able to make very little steps, so to speak, when you look at the range of services that immigration offers. So this gives me the impression that there is still a lot to be done for us to get to where we want to be with automation, because where we are today, automation is just the way to go. With automation, there is actually very little or no face interaction between the regulators and the visa applicants. Of course, you agree with me that this sits well with the new normal, where things are actually done virtually. We'll continue to encourage the NIS, we'll continue to engage as appropriate, and where possible, try to see how we can work with them to ensure that more automation of the processes are done. There's no doubt that automation actually saves time and cost, because when I look at the amount of time, visa applicants spend interfacing with regulators to ensure that visas are issued, it's really enormous. So automation, of course, has helped to reduce the amount of time and cost spent with respect to applying for visa on arrival as well as temporary work permits. Though we believe that there is still a room for improvement with the TWP and also with the visa on arrival, because we've had instances where applications are made and then we still have to go to the NIS office to have FaceTime with them to get the approvals done. Automation, of course, enhances efficiency and effectiveness, and also gives you an opportunity to have real-time updates on where your application is. So without dwelling so much on this point, and I think I would just say that with the few points I've made, automation will certainly enhance service delivery and, of course, guarantee integrity of the application process. Talking about integrity of the application process, we've actually had instances where applications were actually made and where facilities were actually obtained. Where they were obtained, we can't say, but eventually the client will tell you they have a facility, but you can't even trace any application or even trace any file, belonging to the client for such files to have been issued. We are currently handling an issue for a client now who have been given a fine of about 606 billion naira to pay as penalty because the action or inaction of a particular, what I would refer to as quasi consultant has brought them. So with automation, of course, you can guarantee integrity of the application process. So automation is the place to be, and we want to encourage NIS to continue to embrace it. Thank you.
Thank you very much, Lucky. I picked some things from your comment, and I'm happy CPP is here, and that is actually with respect to, I see you touched a bit on the fact that there might still be a little or more work to do with respect to the visa on arrival and TWP, temporary work permit pre-approval process. We are happy CPP is here, and then we know CPP would have the power and it can also make the commitments on behalf of the Comptroller General of Immigrations. Okay. So
very quickly, I appreciate the contribution of Mr. Sada concerning the issues raised about automation and tracking. Automation, in real sense, if we are to go full automation, once the applicant submits his application online, it should have the ability to track that application. It's just like you giving a parcel to a courier service. It gives you certain details. You can track the movement of that particular parcel. And for now, when I assumed office as the reform champion, I told management that I want to be on the platform, on the platform of the approving officers, the vetting officers, and the final listing. As an insider, there is no provision for that. And it's something that I'm working on. And that thing I'm working on, I want somebody like Mr. Sada to be in his office and be able to track the application of a client and be telling me that, see, Mr. Reform Champion, this particular application has been stuck in this particular aspect of the processing chain. What can be done for me? Or what can be done for me? Because as it is now, he doesn't have that power. He doesn't have access. I, as the Reform Champion, don't have access. I begin to trace manually from certain offices and workstations that I know are connected with particular application. We're going to bring it out. So the automation needs so much to be done to make it work and to be at a level that we all can appreciate and give ourselves a thumbs up.
Thank you very much, CPP. Hello, Benedict. I have confirmation that you're back.
Want to do this.
Hello, Benedict. Can you hear me? Thank you. Okay, so
I am, but I'm having problem with the video.
No problem at all. As long as
okay.
The audio is fine. The audio quality is okay from your end.
Okay, no problem.
So I have a question for you. I'm not sure if you saw the result of the poll we took. We just tried to do an analysis of what participants think about the operational cost. What has happened to the company's operational cost with the introduction of remote work? Has it been reduced? Has it increased, or is it unchanged? Is it still same as when office was operating at full capacity and everybody had physical contact? And from the results, we have about 74% of participants saying that the operational cost has greatly reduced. And that leads me to my question for you. From an industry perspective, do you think the consideration for a fully remote or hybrid work option on an indefinite basis, as we can see in some other countries, do you think it is achievable?
Good morning, everybody, and apologies for the video issues. I think hybrid or full remote is here to stay. That's the future of the industry. Is the new normal now, because with COVID and the effects of COVID and everything that's happened, and prior to COVID, for companies like my own, we've been doing some things remotely already. So, but with COVID, it's kind of opened everybody's eyes that there are better ways to operate. Aside from reducing the estate costs and other costs that has been reduced, the industry is the way forward. The future of every industry is remote and hybrid operation. It is here to stay with all of us. Thank you.
All right, thank you very much, Benedict. I would come back to you. I have another question for you, CPP Obua, and it's following from Lucky's comment around automation. Yes, he mentioned the fact that some processes are already automated. The visa on arrival option is fully automated, and also the temporary work permit pre-approval is also automated. Are there any other automation in the pipeline? If you can just give us a grapevine information. Are we looking at, yes?
Yeah, actually, the issue of automation in the Nigerian public service began with the NIS. NIS happened to be the first parastatal of government to have an automated pay system. Gradually, the Ministry of Finance bought into it, and today we have IPPIS that is handling that. The e-passport regime in the whole of Africa, Nigeria happened to be the first in 2006 to have the first e-passport, which is supposed to be fully automated. Yeah, we begin, but yet we don't consummate. We don't get it to the end. It's a systemic problem we have. Very bright ideas. When it comes to implementation, it gets stopped. Now, let me talk about what we have in the pipeline. It has to do with the e-passport. The e-passport is supposed to be fully automated. And if you say you are fully automated, it takes care of the entire process from the point of application, from the point of submission, so that it limits interpersonal contacts or dealings. That was the aim of automation ab initio. But you find out that automation and the manual way of doing things they are still running hand in hand, and it's exposing the system to a lot of corruption. It's exposing the system to a lot of delay, to a lot of hiccups. If you approach the average passport office, you'll be amazed. We have cried to the authorities and say, this is madness. If we are automating, let us start. Even the queuing system, the appointment system needs to be automated. And I believe very soon, the Honorable Minister is going to launch the e-passport queuing system, whereby as you apply online, you will choose an appointment date for the particular passport office you want to visit. Now, the calendar will come up. If it is fully booked for a particular day, if they say, okay, at the Ikoyi passport office, for example, we are only going to attend to 200 applicants in a day, you cannot choose that same day because you will not even see it on the calendar. So that is going to reduce the number of human traffic. We have made suggestions to the authorities that nobody needs to come to the passport office except there's a query or certain controversy bordering on breeder documents presented. We have made a case during the passport reforms, which I was privileged to be part of the committee, that people who want to reissue, who want to renew their passport, or what the immigration court reissue, need not come to the passport office except to come and pick up the passport. All these things are being considered. So we still have a long way to go concerning full automation of our system. It will reduce the inconveniences, reduce corruption in the system, and then the public will be better off for it.
Thank you, CPP. Just a follow-up question to that. Okay, so I understand the bit also, and from what Lucky has mentioned, he mentioned something around integrity of the process, of the automation process. well, I know this might be a form of maybe digging into the security bit, which we are trying to avoid. But in terms of just assuring, or the NIS, the Nigerian Immigration Service, assuring or being confident about the integrity of facilities granted, are there some measures in place for that? Because we've had issues where, say, for example, at the Federal Ministry of Interior, even for the fact that most of the processes are automated, we still have cases whereby some facilities, the expatriate quota approvals, in one way or the other, are not totally genuine. Let us just put it that way, are not totally genuine. And how will you think, what are the checks that are in place? Let me just put it that way.
Yes. We should keep on interrogating the system. We should not be tired of interrogating. I learned there was an encounter, a forum between Deloitte and the Ministry of Interior officials. We keep on interrogating the system. Even for the application of the quota you just mentioned, there is an automation fee of about, I think about 51,000 naira.
51,000, yes.
Yes. The idea is that the company is going to be given a portal, is going to have access to a portal on the website of the Ministry of Interior, where you can begin to even file applications and monitor the progress of your application. We knew who introduced it, but where have we gone since then? And we believe that what must have been accumulated since the policy started would have been enough to put all the structures in place. But we are nowhere concerning that particular aspect. Well, it's a ministry thing, not an immigration matter per se. We've had, you mentioned something about the security aspect of our calling. In as much as we are service oriented, it's a Nigerian immigration service, not immigration Nigerian force. We still have to carry out oversight on behalf of the government in terms of the applications we handle and whom we are relating with, what are the potential risks of granting certain facilities. I mentioned something, if you look at my presentation, I was mentioning something about NLO, no local objection. No local objection means those oversights that are carried out, that may be security based, that may be operational based, that may be procedural based. If somebody continue to apply repeatedly for a particular facility, which the system believes, if the person had taken up residence here, would be better off. And that's why they even introduced the e-pass regime to curtail those of us who want to cut corners by saying that we are only visitors, and then we begin to come in and out. And by the time you take the cumulative average of the person's sojourn in Nigeria, is not different from a full resident. So that aspect of our security oversight, because of delays, it is not a significant amount for anybody to use as an excuse for the delays that some of these companies have experienced. Just this morning, I was able to resolve some issues that my intervention was called for by PEBEC. Mr. Uzosike sent such to me. Not just system failure, not necessarily to do with all these considerations that I've mentioned. So it's still work in progress, and we'll all put I think it's a good thing that somebody like me is there to add my quota towards making sure that the right thing is done by the appropriate persons concerning some of these applications. Thank you.
Thank you very much, CPP. We are also happy to have you, and we know you'll be going back, and once you go back, we would see results and actions in these areas. Okay, I'm back to you, Benedict. So in Nigeria, one of the main reasons, or one of the key reasons for having expatriates come to work in Nigeria is to allow for the transfer of knowledge from the expatriates to the Nigerian. And through that, the Nigerian system has the Nigerian understudy program. Also, as one of the follow-up requirements from the Federal Ministry of Interior, for every expatriate quota approval that is issued to you, you are expected to have at least 2 Nigerian understudies attached to each expatriate occupying each quota position. Now, looking at the introduction of remote work and with remote work arrangements, how effectively do you think the Nigerian understudy program or the transfer of knowledge program, how effectively do you think it has worked out in this remote work arrangement?
Okay, thank you for that question. For the company that I work with is not really a problem because, you know, for us in the oil service industry, majority of our work is offshore. Okay, so the office-based staff that we have is really very small. And for the aspect you're talking about, they have to go offshore to do the work. They have to be on site. So that aspect is not affected by COVID. But the other aspects of the other trainings, in my company, we have competencies, and these competencies, we've always run it online. Okay, so it has been like that prior to COVID. So even with COVID now, even with them sitting at home, those that are not offshore, they have the competencies that they have to do on a weekly basis, and all these are done online. So the present situation, whether we are doing full remote or hybrid, it does not affect the understudy that we have to, the conditions that the government gave us to fulfill as per the understudy, doing their trainings and getting their hands-on experience. So the offshore aspect, when they physically go offshore to do the work, is still there. It did not change. Then the competencies that they have to do remotely is still ongoing. So for us, the company where I work, all we had to do was to kind of put in more funds to make the competencies, you know, to make it wider. Since like last year that they could not go offshore at all, the company invested more and kind of expanded the remote trainings that they had to do with the people that they are understudying and the tests that they had to do. But from this year that they have started going offshore again, the on-the-spot training is still ongoing. So for us in the oil service industry, it didn't really affect us since we don't have much office-based staff. Thank you.
Thank you, Benedict. At this point, I want to believe we are dropping our questions for our participants. Please do well to drop your questions. We might have a window to take a few questions before we close the panel session for today. Okay, so Benedict, just as a follow-up question, I know you mentioned that it is not a problem and that your company as a global brand has more has put in the effort and even the funds to ensure, even while working remotely, the employees are able to get the necessary knowledge or knowledge transfer from the expatriates. I would just like you to talk briefly on the performance metrics. How are they being captured?
Okay.
Has this arrangement changed the performance metrics?
Yes, coincidentally, the company has even performed better last year during the COVID, based on the records that the company has. The performance of the staff, the employees is something else. It's as if them being at home made them, I don't know, everybody, maybe they were more relaxed or something, because it's like in short, in the company, we are all like this is a positive part of COVID for us in the HR, okay? We didn't even have to be calling everybody. We are the ones telling them, please, let's be conscious of the fact that you have different time ranges. You don't have to respond to the mails when they come in at a time that is not your own working time and all that, because we still have to maintain your emotions and all that. So working from home, the remote aspect, capturing their competences, like I told you, the competences that they do online, there are some that you have to be physically, you have to on your video and all that while you're doing it, to speak to your supervisor, to speak to the person that you're, doing the test with. And then, there are some that, which are the exams. After you have done the physical training, you take the exams and all that, and the system marks you before you now go offshore when there is work to do the hands-on practical aspect of it. So all in all, during this COVID period, our company, the performance of our staff was higher than normal. So that's something that the company is still trying to understand how come that happened. Thank you.
Thank you, Benedict. I would like to take a final comment from Lucky. Lucky, it is often said, there's a general saying that the only thing constant in life is change, right? And where change is activated, but the enabling process to ensure the change is well managed is not in place. The stakeholders are often caught up in various transition challenges that can trigger compliance failures and associated exposures. Lucky, how do you think companies can remain compliant in this new normal?
Thank you very much, Oladayo. I think I'm really excited by that question you have asked. And I would like to respond to this question from two angles. First, I would like to respond to it as it relates to the new normal, i.e. remote work arrangement. And secondly, I would want to look at it again as it relates to existing laws and regulations. As it relates to remote work arrangement, we all recall that during the peak of the COVID-19, most countries had restrictions in place, that actually impacted mobility. And for us in Nigeria, at the point where we closed our airspace, we had some expats who had left the shores of the country and were residents in their respective locations. The federal government, in its magnanimity, gave some reprieve to the expatriates who had left the country and whose visa expired while they were out, for them to return to Nigeria, and while in Nigeria, get their visas renewed. So as it is today, that opportunity is no longer there. So for any expatriate employee who wants to go out to a preferred location to work remotely, it is advisable for the person to have his residence permit fully renewed in Nigeria before he makes the trip. And while he's outside Nigeria, he should ensure that he monitors the expiry date of his residence permit, such that when renewal is imminent, he comes back to the country and gets it renewed. That way, the expatriate will be compliant, working for the organization, and at the same time, the organization to enjoy the benefit from the expatriate, because where there are breaches, the expatriate will be in trouble, and at the same time, the company operations will be distorted. So we encourage all HR practitioners to ensure that they monitor the residence permits of the expatriates while they are outside of Nigeria. We are looking at it from the viewpoint of how companies need to comply, with the existing laws and regulations. We all agree with me that with the enactment of the Immigration Act in 2015, and followed by the regulation that was issued in 2017, the need for us to comply, for company to comply, move one step further. So beyond the two regulations I just mentioned, there are other circulars that have been issued by the NIS as well as the Federal Ministry of Interior, that impacted the immigration landscape. So what the occurrence of these activities basically means is that compliance for most organizations is a moving target. And what that simply means again is that as an HRP, human resources practitioner, or those who handle mobility for their companies, they need to ensure that they are abreast with current happenings within the regulatory environment. from where I see, and I've come to realize that we have a huge knowledge gap in the industry. In the industry, when I mean in the industry, I mean in most organizations. Yes, we do respect to all the HROPs on the call. We want to believe that in as much as we are human relations people, most of us are not mobility people, right? And we've seen situations where certain actions and inactions have actually led to organizations being infringing on the law, because they don't have the full range of what it takes to manage the portfolio. So my advice to most HR is that you need to pay attention to those who you give responsibility to manage your portfolio for you, be it a staff or be it a consultant that is going to be representing you at the immigration office. We've had issues with some people who parade themselves as consultants because they are not really that grounded with the processes as it is at the NIS. The fact that you read the law does not actually mean that you have the full understanding of the processes and what it takes for you to manage such a volatile portfolio. So more importantly, we need to pay attention to the people that will give those kind of authorities so that they don't run our organization into trouble. Closely linked with that is the fact that expatriates and organizations are actually issue facilities by the NIS and as well as the Federal Ministry of Interior. So it behoves us as HROP and mobility managers to ensure that we have those expiry dates in focus. And I would recommend a situation where you have a system-oriented trigger that will be able to trigger the expiry date of most of your facilities, so that at the point they are due for revalidation, you approach the appropriate agency or government establishment for the renewals. We should not leave the expiry date to the expatriate alone to monitor, because the expatriates are here to do their job, and most of the time they tend to concentrate on the work they are doing without paying much attention to the expiry date of their facilities. So it's good for us as HROPs to ensure that we assist them in monitoring those facilities, the expiry date of those facilities, such that they don't move from level of compliance to non-compliance. So I think that's wrapped it up for me. Once we can get this in place, then it begins to it becomes a little easier for us to manage them more effectively. Thank you.
Thank you very much, Lucky. I'll confess quite so much there to chew on from you, but we thank you for your deep insight. So we have a question here, and I would like to pose this question to Benedict. We have this question from Omoumi Hassan. And Omoumi is asking, how was recruitment during, how was the recruitment process during the pandemic? Is staff hiring happened? The staff hiring, did it happen physically or remotely, or in what ways did recruitment, how was recruitment handled during the pandemic? Benedict.
Oh, okay. During the pandemic, there was no recruitment because, there was no work. So, but after the pandemic, usually for us, we have two stages in our recruitment. The first stage is remotely. It is when you scale through the remote stage before you come physically. But coincidentally, during the pandemic, we had no recruitment. Hope that helps.
Thank you very much, Benedict. I would have loved to take more questions, but we just have to wrap it up at this point. I would like to thank our paper presenter, CPP Obua, and then other panelists on this session of our webinar. It's really been an insightful session. To proceed, during this panel session, we've been able to take a critical look at adapting to the new normal, and we've looked at it based on the composition of the panel. We've looked at it from the aspect of the company, from the regulator, and also from the consultant, and then to also see one or two things on how the remote work impacts on the operational cost, and if it would bet more operation. So at this point, I would like to yield the floor to my colleague, Sarah, to handle the rest of the webinar. Sarah, please.
Much, Dayo, for that. It's been it's been an interesting conversation, and there's a lot to chew on. And we've had the various insights from our speakers and our panelists. And I'd like to start from Bernadette and Ayodeji's comments. I mean, they stressed the fact that the hybrid and remote work, they're here to stay. And the sooner businesses can re-strategize their workforce management, then of course, the better for business continuity. And from Ayodeji's submission, we're able to get the sense that even though there's a reduction in operational costs relating to office rental, utility expenses, we also have increasing costs in attracting and retaining top talents. And so with the increasing focus on employee well-being, I mean, at Deloitte, we've assessed the increasing move of the reward system from the traditional way of just increasing salaries of employees to other non-financial rewards, like improving employee experiences, so covering more training expenses, increasing focus on the mental well-being, increasing involvement in the environmental, social, and governance activities of companies. Undoubtedly, we have a lot of challenges with this new norm of mobile workforce. And we've seen that tax administrators and other regulators have had to make certain changes to be able to accommodate this. And that's why Mr. Abdullahi was able to stress the importance of taxpayers. I mean, encouraging us to, of course, be more tax compliant. And he also mentioned that, yes, that the Federal Revenue Service is now increasing on plugging those tax revenue leakages by focusing on transactional taxes, the digital business, the maritime. And so, of course, from a taxpayer's perspective, I'm sure we're all expecting us to have at least increasing relief perhaps in the next Finance Act. Mr. Akonde was kind enough to give us Lagos State's perspective on the different reliefs and highlighted the opportunities. I mean, most importantly, encourage the importance of engaging. So having regular communication with the tax authority, especially when we have a particular peculiarity in situations. I see some individuals have their hands raised. If you have comments, please drop it in the comment box and then we can address those. And CPP Obua, thank you for those insights on the different architectural changes in the Nigerian immigration space. I mean, the introduction of that visa on arrival for persons under 18, what the service is doing in order to, of course, move with this new trend. And yes, we appreciate the challenges in automation, of course, the data integrity, and the need that we might still have a bit of the manual process that might cause some backlogs. But thank you very much, sir. And I would like to close on from Ms. Bernadette and Mr. Akonde's perspective. Remote and hybrid work is something that should be embraced because it's now a new norm. Yes, there might have been the initial concern on the challenges, but what we see, especially from Bernadette's submission, is there are other positive opportunities. So Mr. Akonde has highlighted all the many positives from the tax authority's perspective. Bernadette has also alluded to the fact that we have increased staff productivity. This session has been insightful, and I hope each of us were able to get some nice tidbits to help us in our respective lives. I see that there's some questions we're unable to answer, especially in the first and the second panel discussion. Be rest assured that we've taken notes of this and we'll be collating the same and providing responses. Like I said earlier on, the session has been recorded and everyone will be getting a copy of all the paper presentations, and we'll also be sharing the responses to each of these questions to our registered mailboxes. Currently, we have on the Deloitte service offerings, and here at Deloitte, we've got various services to be able to help companies navigate through this new phase. So Tolu Alogo expatiated on the need for companies to track the location of the workforce. So tracking it, identifying the different tax obligations and the taxes that might have been triggered by each of these employees from the company's perspective, being able to that level of preparedness towards the tax filing due next January 2022. And she stressed the importance of starting that now. Yes, we have the tax audits services, and at Deloitte, we have a team ready to assist companies in being able to navigate through this period to ensure their full compliance, and of course, how to plan for their workforce to ensure that the company doesn't suffer any additional costs borne out of this, the mobile phase. At this moment, I'd like to pass on to our Oluseyi Arowolo to give us the closing remarks, because we have now come unfortunately to the end of the session. It's been an interesting discussion so far. Oluseyi Arowolo is our public sector lead at Deloitte, West Africa, and he'll give us the closing remarks for us to wrap up the session today. Oluseyi.
Thank you, Sarah, for a beautiful recap of proceedings, discussions, practical insights, and tidbits from our panelists and presenters. I would like, on behalf of Deloitte, to say a big thank you to you, Mr. Tokunbo Akonde, special advisor to the executive chairman, LRS, to Ajibola Ayodeji, Patrick Nze, and Toduwa Logo from the first panel session, and also from the second panel session, DCI Obua. I will call you offline to appreciate you for your interventions about 5 years ago in relation to a particular matter. And my friend, Benedette Ashikodi, who has, I know she has some claims against me, but again, I appreciate you, Lucky Sada, and also the duo of moderators who have been very effective and excellent. I especially noticed the fact that Ibrahim lobbied for a grapevine input from DCI Obua. I don't know if he succeeded, but at least there is something that he tried to do. And Sarah also, she tried to commit Mr. Akonde to some specific concessions that would be beneficial to our taxpayers, but Mr. Akonde was able to somehow avoid that trap. But that's a very good one. And I must say that from what Benedette also said, Mr. Akonde will have food for thought in relation to the high level of productivity that was experienced by Oceaniering, and maybe she will be expecting some assessment, as it were. But on that note, let me also say that we appreciate all our participants for joining the session. I want to believe that it's been a useful, almost 2.5 hour session, and we hope each of you are living with the requisite knowledge on how to deal practically with certain mobility and tax-related issues around that. As we have assured you from the beginning of this session, we will share via a registered email some of the materials, all of the materials, including some of the questions, the answers to some of the questions you couldn't take during this session. We are highly positioned to support you as you navigate some of the challenges, the implications, the solutions around the issues related to workforce management and all these mobility related issues. Thanks once again for making our time to join us on this special webinar. And I can tell you that there is more that is coming from Deloitte in this area. Thank you so much, everyone. Do enjoy the rest of the day. Bye.
Thank you, everyone. And we've come to the end of today's seminar.
Bye-bye. Bye-bye, everyone.